Okay, good morning everyone. Welcome back to our lecture. We are in the chapter of corporate and business valuation. And in the last lecture, we had just confirmed, had we completed question 14 or was it pending? Fourteenth question is pending or is it over? Just check. It's done. Okay. So last lecture we had completed question number 14. So we will now go ahead. So do you all remember this kind of question where we have to first find FCFF, and then these FCFFs are discounted at the rate KO. Thank you. And we find the value of the firm. You remember and you understand this? Value of the firm. Okay. So, we will now continue ahead. Do one thing. Just once read. Before question 14, which question we did? Before 14. Tenth. So 10th question, once you please read along with solution. Remember how we used to do it. Then we will go ahead. Today this chapter will get over mostly. All done? Working capital note and also na properly. Okay. So we will now go ahead to one of the biggest questions. Question number 11 starts with the word BRS. Huge question. And this question is also the same kind, huh? FCFF and VF and all that, KO, WACC. Same species, that module is going on, FCFF module is going on. Two more questions are left in this module, 11th and 9th, I guess. And then after 11th and 9th, I guess only one question is left, no? Check. Once we complete 11th, once we complete 9th, then if I am not wrong, then only question 1 and 12, 1 and 12, two questions should be left. Just check. 1 and 12. And 12 solution is there in the textbook only, if I am not wrong. Okay. We should be able to complete this chapter today only. Chapter means, yes, part A, that means corporate. See, I told you in module, ICEI module, this is a separate chapter. Huh? Corporate and business valuation is a separate chapter. Like that. I hope you all did your voting. Did na? Why? Tamil Nadu, Karnataka, everyone has gone na to polls 20th, but not fully, I think. Little bit is left. Okay. Okay, 26th. Yes, Bangalore has 26th April, I know. Bengaluru. Alright, BRS INC. BRS INC, very nice name to start a. Read it? Okay, so it will take around 1.5 hours to just solve this question. Huh? So it will take some time. We'll go slow. It's complicated. They are saying BRS INC deals in computer and IT hardwares and whatever. The expected revenues for the next 8 years are as follows. So they have given to you 8 years sales. Okay. So you know now when we calculate FCFF, we will be starting with these numbers, that is sales. Everyone remembers, no? Sales minus operating expenses will give EBIT and all that. Summarized financial position was as follows. We have equity, we have 12% bonds. By looking at this, I realize that we will have to calculate WACC using these weights. Thank you. We will be calculating WACC using these weights 12 and 8. Everyone ready? Okay. And then they have given to you fixed assets and current assets. Students, can I say current assets can be interpreted as working capital? Everyone clear, no? Current assets is like right now the working capital that we have. Moving on. Additional information. Its variable expenses are 40% of sales and fixed expenses are estimated to be for the first 4 years 1.6 million, for the next 4 years 2 million. Additional advertisement and sale promotion campaign shall be launched requiring expenditure as follows: year 1, 2 and 3, 4, 5, 6, 7 and 8. Now students, can I say from sales, if we subtract A and B, can I say we will get EBIT? I hope you are understanding. From sales, we will subtract VC, we subtract FC, we will subtract additional advertisement cost. What we will get, can I say, is EBIT. Now, and from EBIT, I hope you remember, we straight away should subtract tax. We should not go for interest and all. You remember, now we are doing FCFF. I hope everyone was there in the last lecture. Now, fixed assets are subject to 15% as per WDV. Students, my bad, one mistake I did. Sales minus variable cost minus fixed cost minus advertisement cost minus depreciation will give EBIT. Everybody clear, no? Generally, you know, generally depreciation is included as a part of fixed cost. Generally, depreciation is a part of fixed cost. But students, I forgot to read one word here. Can you see the fixed cost given are, look at this word, cash. Okay, so that means the depreciation is not a part of it. I hope you are able to understand what I am saying. So hence we will have to separately calculate depreciation also, correct? And then we will get EBIT. So there are 3 cash expenses and 1 non-cash. In fact, if you remember your capital budgeting chapter, sales are like cash revenues. Variable cost, fixed cost, advertisement costs are like cash expenses. Can I say by subtracting cash expenses we get NPBDT, like that? You remember net profit before depreciation and tax and then depreciation. Okay, but anyways, we will not go that route. We will say sales minus VC minus FC minus advertisement minus depreciation will give EBIT. Okay, moving on. The company has planned additional capital expenditure in the beginning of each year for the coming 8 years as follows. So in year 1 we are planning to buy assets worth 0.5 million, year 2 0.8 million and so on. Okay, students, can I say this has to be taken into consideration while calculating depreciation? I hope you are able to understand. Because depreciation, do you realize, will be 15% on whatever is the value of the asset then. But then if you are keeping on adding assets, that also will eventually be depreciated. No, you are understanding, that also has to be taken into consideration. Point number E. Investment in working capital is estimated to be 20% of revenue. Yeah, I think you know what to do with this. When you know what is the format of FCFF? After EBIT, we subtract tax. We get NPAT, we add back depreciation, then we subtract investment in capital expenditure and then we subtract this investment in working capital. Everyone clear? Okay. Applicable tax rate for the company is 30%. Cost of equity KE is 16%. FCFF is expected to grow at the rate 5% per annum after 8 years. Okay, now there is something I want you to understand here. Now students, look at me. In question 10 you saw, and even in question 14 if you remember, 14th also you did on your own only. Now in that they will say that there is a high growth period and then there is a stable growth period and all that was there, remember. So In high growth period, sales, revenue, EBIT grows by this. In the stable growth period, they will grow by this. So what we did, like in question 10, high growth, can I say, was 4 years, and 5th year onwards, can I say the growth became stable. So while calculating FCFF, we did year 1, 2, 3, 4, and we had also to do 5. Now I hope you're understanding. And then 5th year, which was the stable growth period, 5th year FCFF we got, and from there, can I say, we took the Gordon's formula. Everyone remembers this? Here they are saying that the stable growth, can I say, look at point number H. Na? The stable growth will start from from year 9. Everybody clear? Stable growth will start from year 9. Because they are saying that after 8 years, na? Which means for 8 years it will be, for 8 years other thing will happen. 9th year onwards it will grow at 5%. Now I want to talk to you something. When we will be doing our final answer, we will do 1, 2, 3, 4, 5, 6, 7, 8, 8. You understand, na? 1, 2, 3, 4, 5, 6, 7, 8, 8. Where P8 will be D9 upon K minus G. You know that, na? 9 to eternity and all that. But when we will be making our main statement of FCFF calculation, we will not show year 9 calculation. We will only do 1, 2, 3, 4, 5, 6, 7, 8. That's it. 1, 2, 3, 4, 5, 6, 7, 8. Now, can I say this is unlike question 10, because in question number 10, in that FCFF calculation, we had taken year 5 also. You remember, where the stable growth was there. Then here, why are you not taking year 9 when the stable growth is there? I'll again repeat myself. I am not talking of the final present value calculation table. In that, of course, I will be doing 1, 2, 3, 4, 5, 6, 7, 8, 8. Where the last will be P9 upon, all that P8 is equal to D9 upon K minus G. I am not talking about that last table. I am talking of the FCFF calculation table. In the FCFF calculation table, in question number 10, we had to do FCFF of year 5 also, na? Where, you know, the growth became stable. Here then, can I say, we should have also done for year 9 when the growth becomes stable. But here I am saying no, we'll stop at year 8 only. The reason is that in question number 10, that you did, question number 14 that you did, they had given to you the stable growth in sales, stable growth in EBIT. You are understanding, and therefore we have to calculate. Here, can I say, they are saying that the growth of 5% will be straight away on FCFF. I hope you are listening. Which means year 8, whatever FCFF you will get, no, that will grow at 8%. I hope you are able to understand. That will grow at 5%. I hope you are able to understand. It is now not about at what rate sales will grow, at what rate EBIT will go, because at the earlier questions, those rates were given. See, if you see question 10, question number 10, the stable growth was not of FCFF. The stable growth was of revenues and EBIT. Everybody clear? In that, the capital expenditure getting offset and all this had to be taken into consideration to find that 5th year cash flow first and then grow it at the rate 10%. But here, can I say, it is simple, because here they are saying forget all this. Whatever FCFF you got now at the end of year 8, that only you take and you grow it at 5% forever. Everybody, are you able to understand? So basically year 9 FCFF, you need not worry about what its sales will be. You need not worry what its EBIT will be. You need not worry about the offsetting of depreciation and capex. You need not worry about working capital. You understand? They are saying don't think about all of that, like how you thought in the earlier question. Just take the FCFF of year 8 and start growing it at 5%. Everybody clear? Which is why in the table, the working note, we will make only till 8 years. Now, very interesting. With the above information, you are required to determine value of firm, value of equity. Students, how do you find value of firm? That is what we have been doing till now. Just take the FCFF, discount them at the rate KO, find the value of the firm. How to find value of equity? From the value of firm, subtract value of debt. I hope you are able to understand. From the value of firm, subtract value of, you remember inter C also this was there, V bracket F minus V bracket D used to give you V bracket E. Everyone clear now? That's what we are supposed to do. Game over. Now finance teaches us that to find value of equity there is one more route. What is the other route? Look at me. Sales minus variable cost minus fixed cost minus depreciation minus interest will give EBT minus tax, NPAT and all that, and then those cash flows that you get, you should discount them at the rate KE, and then what you will get will be PV of CI, that is V bracket E directly. Students, that was FCFE model already done in equity valuation. You are understanding, no? In equity valuation, the free cash for equity model. In free cash for equity, interest etc. is subtracted, and the discounting happens at KE. That is how you find the VE. But in the FCFF model, you don't do that. In the FCFF model, you don't subtract interest. I hope you are understanding. And therefore, the discounting will happen at KO, and the present value you get is V bracket F. And to find V bracket to find V bracket E, you simply subtract V bracket D. I hope you are able to understand. So it is like this. There are these other cash flows. Other cash flows means sales, everything else, and then there is this interest. Now if you subtract interest, can I say what you get is FCFE, and if you don't subtract interest, what you get is FCFF. Now forget tax for some time, let's not complicate it. So FCFF is there, interest is there, FCFE is there. Now if I want to find value of equity, what to do? Take the future FCFFs and discount them at the rate KE. Take the future FCFE and discount them at the rate KE. Can I say directly you will get value of equity? This was done in equity valuation chapter. Everybody clear? Now what we are saying? We are saying no, not this. You take the future FCFFs and discount them at the rate KO. I hope you are able to understand. Discount them at the rate KO. When you discount at the rate KO, we get value of the firm. But sir, I want to reach value of equity. How do I reach value of equity? Take the future interests and discount them at the rate KD. Can I say future interest discounting at the rate KD is value of debt? I hope you are understanding. So can I say from value of firm, I will subtract value of debt, automatically I will get value of equity. Everybody clear? So to find value of equity, either we play around with cash flows or we play around with present values of cash flows. Everyone clear? So in the equity valuation model, we played with the cash flow. We subtracted interest. We only took the free cash available for equity only and discounted at the rate KE only. Directly we got value of equity. In FCFF model, we will not subtract interest. We will take the full FCFF. We will discount at the rate KO. We will bring it back. And what we will get is value of firm. But now I will say no, in that value of firm, we did not subtract the interest from cash flows. Okay, so take the interest, future interest, discount them at the rate KD, and if what we find basically is value of debt, and from value of debt you subtract from value of firm, what you get is value of equity. Everybody clear? Sure, now you all understood. But of course, in this whole discussion, this interest discounting at the rate KD and all we need not do, because value of debt is given in the question, that 8 million we will take and go ahead. Everyone following? Like that. So what is the difference between FCFE and FCFF? interest, na, the only differentiating factor is interest. I hope you're understanding. FCFE and FCFF. So if you subtract interest, if in this table only you subtract interest, then automatically the cash flows become equity cash flows. No, you're understanding? They automatically discount at the rate KE. Automatically you get equity valuation. But if you don't subtract interest, then those cash flows belong to both debt and equity. Then the present value at the rate KO you will have to do. You will get the value of both debt and equity. You're understanding that V bracket F is the valuation of both D and E. No. So now if I want value of E, then just subtract value of D. That's it. Got it? That is what you have to do. Okay. So this is our whole theme for this particular question. Students, how to start? Baby steps, baby steps. Let's first do WACC. Are you all there? Let's first do WACC. 1 point over. We'll cancel out that from the question, that we will not see that, and we'll go ahead. Everyone ready? Small, we will do. Okay. So write down question number 11. Step 1. Calculation of WACC. WACC. Can I say WACC, that is bracket KO, is equal to weight of debt into KD plus weight of equity into KE. Now, how do I get weight of debt and weight of equity? Can I say 8 by 20 and 12 by 20? I hope you are able to understand. 8 by 20, 12 by 20. So this is 8 by 20. Now, how do I get KD? Can I say KD will be interest rate into 1 minus 0.3. I hope you are able to understand. Interest rate bracket 1 minus 0.3, 12 into 1 minus 0.3. So 12 bracket 1 minus 0.3. Weight of equity will be 12 by 20 into the KE is given in the question as 16%. 16. If you solve this, $12.96, no? You got 12.96. ICAI has rounded it off to 13%. All done? Okay. So step 1 done. Now I want you to tell me on chat box. Think. You want to find value of firm, huh? What could be your next step? Think. What we should do to find value of firm? Value of firm is basically present value of all future FCFFs discounted at the rate WACC. Can I say WACC means KO basically? Can I say KO is settled? Now what next to do? Yes, so we will do FCFFs, correct? but there will be a problem. We will get stuck in one place. By the way, FCFFs, do you realize, will be for year 1, 2, 3, 4, 5, 6, 7, 8. 8 years FCFFs you have to find. We will get stuck at one place. Think, just go through mentally. What all is there in FCFFs? Sales. Now think, go down. There is one place where stuck means you don't have the information as of now. We will have to first make a working note to calculate that information first. What all costs are there? And in that cost, is there anything which we don't have? Tax. Okay, I'll tell you. Students, yes. Depreciation calculation we will have to do separately first. You're understanding? Because now there is some complication, no? What complication is there? Additions are happening. You're understanding? And on top of that, there is a WDV depreciation. So we have to be very careful. So see what I'm doing. Just wait, don't write. Step 2. Calculation of depreciation. Step 2, calculation of depreciation. Year opening balance, add additions, total minus depreciation at the rate. What is the depreciation rate given? Where is it? 15%. Depreciation is at the rate 15%, and you will get closing balance. So what I will do is I'll put here opening balance, add additions, total. Okay, and this is your closing balance. Everyone ready? Let's start with year 1. Okay, I am waiting. You keep telling me the number. What should I put in opening balance? Year 1. By the way, whose opening balance? We are not finding opening balance of depreciation account. Hello. We are finding opening balance of the fixed assets. So yeah. So can I say there is a 17 million? What is it? Million dollars. So dollars in millions. So $17 million is your opening balance. Okay. What are the additions in year 1? Search the question, you will find it. Additions in year 1. Okay, 0.5, correct? 0.5 additions, and they are saying at the beginning of year 1 only we are doing it. See, at the top of the table they have mentioned at the beginning of the year. Additions at the beginning of the year. You saw that? Okay. So that means, can I say the total will be 17.5 million. Okay, get me depreciation for year 1. 2 decimals enough. Okay, 2.63 I will do. Okay, 2.63, subtract please. Subtract 2.63, okay, and you get 14.87, which then becomes the opening balance for year 2. Everyone ready? Students, you got the table correct? Can you complete 8 years and get exact answers? I will show you the ICI solution. Get me 8 depreciations. I hope you realize the only thing relevant in this is the second last column. Okay, all right. Unfortunately, they removed the question only from the module. It's okay. I have the solution, don't worry. It's okay. Just check this. Is this it? Check the depreciation column only. Huh? If depreciation column is correct, that means everything is correct. In that also, I will recommend just check this. If this is correct, means everything must be correct. Okay, done. 2.15. So since morning we have done only this much, but it's okay. All right. So we have come, and of course not this much. This is year 3, 4, 5, 6, 7, 8. Till here we have done. So our depreciations are set. Everyone ready? Okay. Students, next step, I think we can now touch FCFF. Everybody clear? We can touch FCFF. Now, for FCFF, we'll have to make little big column. See here. So I'll write here step 3, calculation of FCFF. Particulars 1, 2, 3, 4, 5, 6, 7, 8. One, 2, 3, 4, 5, 6, 7, 8. Now it is okay. Everyone ready? Now listen. There will be sales, there will be variable cost, there will be fixed cost, there will be advertisement cost, there will be depreciation, and then students, once you get depreciation, you will have EBIT, you will subtract tax. What is the tax rate? 30%. 30%. You will get NPAT. In NPAT, you will add depreciation, you will subtract capital expenditure. Where is capital expenditure given? Don't search the question. Wait. Your this column, no? I hope you are understanding. Everyone ready? Your this column. All following? Now, I will ask you to not do that. Okay? I will ask you to write only plus depreciation and keep. Can you finish till here? Subtracting part we will do together. There is a small complication. Okay? Start. All done? Okay, so I will show you your NPAT. Check till NPAT, okay? Okay, please check. Don't check the add depreciation row, huh? That has to be correct. You have to check NPAT. All done? 100% correct? Okay, great. Now students, there is a complication, okay? Not much complication, but simple. See, all the best to all of us, and I hope we sail through. All right. So now don't write this, huh? Don't write this. There is a reason. I will write here minus capex and minus investment in working capital. Everyone ready? Okay. Now see, capex for year 1 is, can I say, 0.5 capital expenditure. So in year 1, whatever cash flows we are getting, from that, can I say 0.5 has to be committed for fixed asset purchases, and like that little bit has to be committed for working capital purchases. Everybody, are you all there till here? Now, they are saying that working capital will be 20% of revenue, okay, 20% of revenue. Now your revenue of year 1, can I say, is 8 million. Everyone ready? Revenue of year 1 is 8 million. 8 into 20% will give you 1.6. Everybody clear? 8 into 20% will give you 1.6. So do you realize 1.6 million will be required for working capital, which means a total of 2.1. Everybody clear? A total of 2.1 will be required for capital expenditure and working capital. Till here clear? Krishna, clear, no? Okay. Now, ICAI is saying in this question that in year 1, put dash and dash, or you can write minus capex and working capital combined dash. Now you will say why? Because if this becomes dash, do you realize whatever are the profits only, that only will become free cash for firm. You are understanding? Why are you dashing it? So the answer is that why are you saying that you want 2.1 from year 1 profits when you already have a cash balance of 3? I hope you are understanding what ICAI is saying. ICAI is saying that working capital, current assets, now you already have this much with you. When you already have this much with you, take it and go ahead. Why are you putting pressure on year 1's profits? Everybody clear? So it is like this. You are going to first month of articleship. Every month you are going to earn some stipend of, let's say, 1,000 rupees. Oh, sorry, I told you my stipend. Okay, when I used to earn. So my 3 stipends were 1,000, 1,500 and 2,000, like that. Anyways, so every month I will be earning 1,000 rupees, 1,000 rupees. So now let's say my train pass is going to be 200 rupees. Okay, train pass 200 rupees per month. So for me, I will say, that my free cash for Rahul Danait is 800. Everybody clear? My free cash for Rahul Danait is 800. Because every year, no, every month I'll be getting 1000, every month I'll be paying 200 rupees. But then the question is saying, Arey no, because you're going for first year or first month of articleship, your uncle came and gave you 500 rupees. You're understanding at the start only. So then do you realize, if I'm starting only with a 500 rupee note in my hand, I hope you realize that month one stipend fully will become free cash, no? You're all able to understand? Month one stipend will become free cash, because from that I will not be using 200 rupees. I will use 200 rupees from what I already have. I hope everyone is clear. But once my 500 gets exhausted, then can I say future months 200 rupees I'll have to start reducing. That is the concept. Okay. We will crack articleship jokes more later on. Okay. So now, you people are having 3 years or 2 years article? Okay, some are having 3, some are having 2. The ones who are having 2, that is 3. Those who are having 2, you people will get a free 8-month leave at least between articleship and exam, na? Assuming you all started articleship on time, and assuming you did not waste time thinking for Big 4 and Big 5 and Big 10 and Big 20 and all that nonsense, and you took whatever you got and you started, at least 8 months you will get. Correct? Nonsense means Big 4 is not nonsense. Nonsense means is the attitude. I want this only. Till the time they are not giving me any, attention, but still I'll run behind them only. That attitude is wrong. People waste so much time, no, in all this. Waiting. If someone is not interested, then it's okay, no? We move on in life. What to do? There are many more, like that. I'm talking about articleship. Yeah. So since you all have started on time mostly, so you'll get good. So in that 8 months, 1 month you can actually go around and roam also. You can just take a leave. But then 7 months intense, you should study. Good opportunity you have to complete in first attempt. Now those who are 3 years, don't worry, all of us were your category only. So we also were able to clear. But you will have to start now. Unlike the 2 years one, you understand, no? The 3 year one people cannot wait till articleship gets over. You will have to start changing some things now only. If you want things to change, things should change. So start, please, don't waste time, and little, 10 minutes consistently study every day. See what will happen. Miracle. Compounding, no, I have learnt in life, compounding effect is not only in finance. I have a very personal wisdom, nobody will teach you all this. I am telling you, compounding effect is not only in finance. Compounding effect is there in everything on this planet Earth. Anything you do consistently, no, initially you will not understand, but then when you eventually such a big result comes, no, you have no idea. Start doing 10 minutes every day. I was telling this to this one batch yesterday only. For final CNO, I used to go to library. In library, they had a library timing of 12 p.m. to 5:30 p.m. 12 to 5:30 p.m. And it was not a library also. It was like a newspaper reading room where I used to go. It was like a municipality newspaper reading room. So I still remember few of us did some andolan. We went to municipality government office, this, that, we fought. Please give us more time to study and put it 7 days a week. They only had 5 days a week. It was not a study room. It was like a newspaper. So I said, let the students come. So my exam was in May. In February, they did 7 a.m. to 11 p.m. library timing. Of course, I never went at 7 a.m. but I wanted it to be till 11 p.m. because I was a night study person like that. So library helps a lot. If at all you can just get out of your house and go to a library, study there, it will help a lot. And there, what I did, I invented one technique of studying. Later on, I came to know that many others have also invented it, but across the world. So, not necessarily in CA. What I did is, 10 o'clock now I used to study, start studying, I used to get very irritated when at 11 o'clock also I was on the same page. That used to be very irritating for me. It's like a waste of time. Where our mind goes, we don't recognize only. It will cheat you so much. It will take you to such other, and people like me and all of us final CA, we people start fantasizing life post CA. And we start we have all gone through this, so that is so alluring that the studies become super boring. Now at that time, that used to be the only distraction. Now for you, the distractions are on a mass scale. I was studying the invention of television in America in 60s and 50s. It is a conspiracy theory, but it is a very nice theory. The government of America then wanted to pass some kind of drastic law change, but the people were so sharp that they would have caught it and they would have done some kind of andolan or whatever. They would have done protest, and therefore it is said that they hired a group of scientists to invent something that would make people's sharpness dull. And these people came out with television. This is one conspiracy theory, but it is true. And that same thing now has entered into a manifold monster called as social media and mobile phones. And this, I personally feel, is a big opportunity for you to shine in your community of CA students. You will be able to shine because majority of them are distracted and weak mentally right now. You're understanding? You have an opportunity of disconnecting yourself from what everyone else is doing, and easily you become a star. You're understanding? In a sense, star in a sense, people will realize, my God, look at his focus, look at her focus, look at how much he's studying this, that, this, that, this, that. That you will be able to do only if you cut out on social media. So, one very nice thing I saw on social media only, but I saw that, why are we not able to study for long hours? Including myself. Why are we not able to study for long hours? The reason is, they very beautifully connected it to scrolling. We scroll this Instagram kind of this thing, scroll. By doing that, they say habit takes 21 days and all. What 21 days? 21 months we have been doing this. We have kept scrolling. Our mind has become used to not stay on one post for long. You're understanding? We have been conditioned, we have been programmed, we ourselves are to blame, and that restlessness comes from this. You're understanding that, okay, next, no, I want new. Because of that, how then you expect that your mind will stay on a boring theory subject page for long? It is not possible. You are understanding? It is not possible. You cannot perform on the stage any dance unless you have practiced the same in your regular life also. Direct stage performance is not possible. I am convinced about it. I think Riddhi will accept it. Correct? It is not possible. You can't say last minute I will do. No. Hey, I am talking studies, huh? Exam, no. Exam, of course, last minute you can't do. Even studies, last minute you can't do. Your lifestyle has to be in sync with it. If your lifestyle is something else, your performance will not have results. Therefore, my request is, let us both do it. This week we are there together till end of Friday or Saturday, whatever. At least till Thursday we are together. Monday, Tuesday, Wednesday, Thursday. Challenge. Both of us will do. I also have to do. You know how I get caught? I get caught watching dog and cat videos. All these cute animal videos, they catch me. I go crazy. I keep watching. I keep watching that. And in that, my Instagram watch time goes up. And now, we both will take a commitment till Thursday. 4 days are there. And let us monitor our watch time. Today after the lecture, you see what your average watch time was there, or yesterday's watch time you see, yesterday Sunday, best. See yesterday's watch time. Okay, we have to reduce it. Okay, I think let us keep a target of 1 hour. Maximum watch time. Now this will include everything. Huh? This will include YouTube, Instagram, WhatsApp. I was studying from PDF. No, everything. Everything included 1 hour. If you are really desperate to shine, you take that PDF, take a printout and read from a piece of page. But now, because now, this thing, when it captures your attention, you never realize. You're getting it? Everywhere the standards of success have dropped to mediocrity. Everywhere everyone is behaving so mediocre that mediocrity is the new standard. We should break it. Okay? And we should excel. So to excel, the step 1 is to reduce distractions. Otherwise there is no possibility. 10 things you do, you will not be able to do anything. Paper, there is so much sun energy is there, but a paper will not catch fire by putting it in sun because the energy is spread across. Only when you put magnifying glass, then only it catches fire, no? So energy is like that. So you have to concentrate it. Everything has to go into one place. Only then you will get results. So putting energy into studies is secondary. We have to first be ready for starting to study. We are not ready. Today, if I tell you just no articleship from now, no classes from now, full day you have to study. You think, will you even, today we are saying that we don't get time. I am telling you take time. You will still not be able to study because you are not ready. You are understanding? So, let us take these few days to detox from digital distractions. It is massive. Just detox. Okay? Nobody go to vote, of course. But no need of following the news. What is happening? Oh, today turnout is this. Oh, this is happening. That is happening. No, no. You should go vote, come back. You have everyone is focusing on their own career. You focus on your own. And your career right now is very simple. You have to clear one exam. There is nothing else. So don't complicate it. So I'll give you a technique to study which I invented. I thought I invented. I actually invented it, but for my but like that God gave intelligence to many more. So it eventually I came to know is very famously known as a technique called as Pomodoro technique. I spoke about it earlier sometimes. Anytime? No, no. Pomodoro, you have heard about it. So I'll tell you what I did. 10 o'clock I used to sit to study, no. 10 o'clock, like for example, 10 is an example, I used to start studying at 12 to be very precise, afternoon. Now I am talking of my study leave period, okay. 12 o'clock if I sit to study, I used to keep alarm in my mobile phone of 12:30. And I used to tell myself, come what may, before the alarm rings, at least 2 pages I should complete. Now, even if I complete 1 page, it is great. Earlier you used to complete 1 page in 1 hour. Now you are completing 1 page in half an hour. It's okay. And as and when you realize that okay, 1 page easily I can do, increase the standards. 2 pages, 3 pages, 4. But I did half an hour alarm. Every half an hour there was an alarm. So because of that my mind used to, even if it used to roam around mentally, think about this, that, oh, post CA, first of all I'll go and tell that person that see I completed, and all those kind of revenge fantasies you have at times. So all those things you do, but then what happens is, because of the fear of the alarm, and if you have little bit self-respect, which I'm pretty sure being chartered accountant students you have, self-respect comes handy. You know where it comes handy? That if the alarm rings and I have not completed, you will feel so guilty. So alarm is there, and in order to not feel guilty, you will bring your mind back from wherever it has gone. You will bring it back again, put it on studies. Okay, like that the psychologists say that you should study for a period of 20 minutes or some 25 minutes, something like that they say. I think 25, they say 25. They call 25-minute studies as 1 Pomodoro. And they have said that you should do 1 Pomodoro of 25 minutes and then 5 minutes you should take break. Now I am telling you, 5-minute break should not go in mobile phones, because then you are further damaging your mind. You're understanding? Break means just breathe. Observe your breathing, relax, do pranayam, do something which silences the mind, or just sleep. But this scrolling now is going to again disturb only. You're understanding? Then after 5 minutes, they say do second Pomodoro for 25 minutes. Then 5 minutes break. Then again, like that they say one should do 4 Pomodoros in one cycle. 1 Pomodoro cycle is 4 Pomodoros. But right now we are not ready for that. You understand, no? Our mind, our brains are, our body, everything is, we are like so distracted. So I am saying, let us do Pomodoro of not 25 minutes but 10 minutes. You are understanding? Let us do Pomodoro of 10 minutes. So you have got 3 days, 4 days till Thursday. So let us do 2 Pomodoros a day. 10 minutes, 2 side. Now whenever you take time, it's your lookout. 10 minutes, 10 minutes. 20 minutes studies you have to give for yourself. And I hope you realize this is what is called as giving time for yourself. You're understanding, no? You have to. Because I hope you realize great articleship with no degree is useless. Okay? Average articleship with degree gives more money. You cannot go around telling people, hey, I have experience, I have experience. It doesn't count, na. There is no quantification. Quantification comes in the form of degree. So that degree, if you don't have, everything you have done till date, in one sense, will stare at you and ask you, what are you doing? You're understanding? Everything you have been doing till now is for this last exam. Just think about it. And hence, we have to start taking it very seriously. So 20 minutes, don't tell me you don't have time. You will have. I'm telling you now, you cut out, if your mobile screen time is 2 hours, if you're bringing it down to 1, it's done now. You have 1 hour. Somewhere you have 1 hour. I'm not asking 1 hour, I'm asking 20 minutes. I am also going to start from today. Of course, I read, but I'll with you also. I'll think about you, and I'll also study for 10 minutes, 2 slots. Somewhere I'll find time. You will also do, I'll also do. Commitment. Tomorrow I'll ask. I'm going to stop. Actually, no, Instagram I had deleted 2 years since. For me, no, I was on Facebook. It was very peaceful. And 2018, once in one Chennai batch, I asked, I told students were shouting, sir, how will you be in touch and all that. I said, you add me on Facebook. So they laughed on me. And they said, what, Facebook and all? We are on Insta. So 2018, I came to Insta. And I was shocked to see the hyperactivity on this platform. And I put one message on Facebook like, dear all, no more. Not no more. I said I am also now on Instagram. Happy to see all of you also on Instagram. Like that, I put one message on Facebook. That was my last message. So one girl commented there, yes sir, because now our parents are on Facebook. and then Instagram. So in Instagram, I just didn't realize what to do on this platform, because what people generally do on this platform, I don't do. So I didn't understand what to do. So it was like a defunct app. But then recently, I got one idea of helping students, because so people were following. I didn't know what to do with so many followers. So I said I should give back something to society. Give back something to followers. So then I came out with that idea that let us do some study related things. So you must be seeing now I'm putting some posts for inter-CA students. I'll be posting that for final also. But see, this is called as Maya. in the quest of doing that, I go to that search bar and I see all those reels where all those, I was supposed to come on Instagram for study related, but I end up watching cute dog and cat videos. You're understanding? But this is waste of time, no? So I therefore, I am also going to delete it, and whenever I have to post something, I will install it. This is what I used to do earlier. I'll install it, I will put the post, I'll delete it again. I don't want to see my comments, I don't want to see how many people shared it, I don't want to see how many people liked it. It is irrelevant. Whoever wants to study. Correct? Our goal will be to focus on our studies. You focus on your studies. Everyone clear? We'll do that. So mission, 4-day mission. Huh? If 4-day mission is successful, then next week when FM again is there next week also, we will see if we are able to do this. We will increase our Pomodoro. Okay? Excited? Finally, we will do that which we always wanted to do. Studies. Once you are through from CA, then you need not worry about all this. In fact, once your CA is done, you can afford to have 3 hours screen time. It's okay. Money will keep coming. You're understanding? That's the beauty of this course. You want to excel and become Virat Kohli of your own profession, then also you have to cut out from distractions. But at least even if you are distracted, you are still going to be financially safe. But this period now you can't afford. You are understanding? This period you can't afford. This period you have to cut out. Like that. Done? Okay. All the best to both of us. 20 minutes, hashtag 20 minutes Pomodoro, 10 plus 2, 10 into 2. Okay. Alright, so and screen time 1 hour, remember. Screen time 1 hour. Max. Tomorrow everyone should put their screen time on the chat box. I'll also put. Okay, thank you. So now, coming back. So can I say 2.1? 2.1, you remember 2.1 capex plus, capex was how much? If you remember, capex was 0.5 and working capital was 1.6. Can I say a total of 2.1 million was the investment you wanted to do from your year 1 articleship stipend? From there it started. From year 1 articleship stipend, you wanted to put 2.1 into capex and working capital. But then ICEI is saying, Arey, uncle has already given you na 3 million, use it. Everybody clear? So if 3 million is already there, then do you realize that in year 1, capex and working capital combined, I will not be required to use anything. Everybody clear now? I already have money. Okay. Students, can you tell me year 2 capex is how much? Year 2 capex is how much? You already have written in your working note, no? It's there. Textbook also you can find. Additions to fixed assets. 0.8. 0.8. Additions to fixed assets 0.8. Can you tell me in year 2 how much working capital will be required? Year 2 working capital required, please. Okay, so you are saying that 10 million is the sale amount. On 10 million, 20%, 2 million is the working capital. But that I hope you remember is wrong. It will be 10 minus 8. I hope you are understanding. That one cycle is already started, no? Now you need to calculate only on the incremental. I hope you remember last lecture, right? So 10 minus 8, do you realize it will be what? 2, and on that additional 2 million, can I say you will require 20%? That is 0.4. Everyone clear? 0.4. All following? 0.4. Now I want you to think deep and hard. Total, can I say you will need 1.2. Now, can I say that whatever 3 million your uncle had given you at the start, from that 3 million, do you realize that 2.1 million has already been used? Come on everyone, 2.1 million has already been used for year 1 capex and working capital, which means I still have uncle given 0.9 million with us. This 0.9 million, do you understand, I will use for this 1.2, which means, can I say, from year 2's stipend that I will get from articleship, 0.3 I will have to use. I hope you are able to understand. 0.3 I will have to use for my travel and this and that, because my uncle's money got exhausted here. Everybody clear, na? And can I say from year 3 onwards, normal calculations will start. I hope you're getting it. From year 3 on, because now whatever uncle gave is all over. Everyone clear what I'm trying to say? What uncle gave is all over. Done. So, what we will do is, we will make one table for this. So, in the notebooks, no, please write down. Plus depreciation you have done, na? Now write down minus capex and WC. Minus capex and WC, bracket working note 1. Minus capex and WC, working note 1. Now, I just want to tell you, many of the notes you see in my here now, these are the notes I wrote in my 20s, and it will have a lot of youthful exuberance. In Hindi we say Jawani ka Josh, meaning unnecessary. I wrote a lot of things. You understood, na? In that full. So people download, they are passionate, you know, in all that disco and all that. I used to write. Introverts, no, we don't do all these things. So write. And I wrote so much So then I realize, now when I show the notes, na, people in Bombay, they say, sir, this point is Javani ka Josh, you remove it. It is not required. So like that, I will now show you one table. Unnecessary I made it. See so much big, this is not ICAI, this is my table. This, it was not required. Now I'll just say where all we can cut out. Okay, see. So let's talk about year 1. Okay, in year 1, investment in fixed assets, can I say, is the capex. Everyone clear? 0.5. Investment in current assets, or basically I would like to use the word working capital, can I say, is 1.6. Total investment 2. Everyone clear till here? Total investment is 2. Now existing investment in current assets, can I say, uncle has already given 3. Now I am writing again. Oh no, out of 3, no, used for FA, used for CA, no need. Everyone clear? Of course, used for everything, no? Huh? Okay. So existing investment is 3. Correct? Now additional investment required therefore is 0, because out of 2.1, out of 3, this entire 2.1 is taken care of. So nothing is required. Now year 2, can I say, year 2, investment in FA 0.8, investment in working capital 0.4, total is 1.2. So in year 2, I need 1.2. Now can I say, out of 3, if 2.1 was used, balance, can I say, 0.9. Everyone clear? Balance is 0.9. So for satisfying 1.2, 0.9 I have in the existing uncle given money. So can I say, in year 2, the additional investment required is 0.3. Everybody clear now? And can I say, from year 3 onwards, this column and this column is of course going to remain same. Because do you realize that whatever investment you do, that much investment is required, because I don't have any more money of uncle and all that. Everybody clear? All done? Great. So what we will do is, in your notebooks you have written add minus capex and working capital and all that. Okay. So what I will say is, make a year column, capex, investment in WC, total investment, an existing investment in CA, balance also not required actually, an additional requirement. Additional, so hold on, just 1 minute. I'll just give me 1 minute, don't write. Okay, copy this table. This is your working note 1. Okay, wait. Students, after you here na, just write, after this there will be FCFF. Here the table gets over and then working note 1. Understood na? FCFF and then working note 1. Acha, by the way, you understand na, from year 3 onwards, it's like last earlier questions only. Huh? From year 3 onwards. No, no, no. No this space will have to leave from depreciation to capex. I did not understand this. No, 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 no. I did not. No, 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 no. Sorry. This I did not write anything because I just the page got over. There is no space to be left. After add depreciation, straight away subtract minus capex and working capital, working note 1 and FCFF. There page got over now, so I came to the next page. God knows why I am doing that. Earlier I did not do that. I know that. Okay. As you are writing, just think about years 6, 7 and 8. Why is that investment in working capital going negative, negative, negative? Because sales are dropping. Very good. See, as sales will increase, can I say you will require more and more working capital, na? But reverse also, can I say that, so bracket means, it is like the release of working capital, not required. Money comes back like that. In capital budgeting, you remember when you used to invest in working capital, at the end of the life of the project, when the working capital is no longer required, it comes back as cash inflow, na? Like that it is. Negative investment means cash inflow, getting it, na? Coming back. All done? So the last column you see, na, last column, do you realize that is what will be putting pressure on the FCFF. You are understanding, no? From FCFF we will be subtracting this. So in years 1 and 2, so year 3 to year 8 are telling years 1 and 2. Why in year 1 and 2, why are you people not contributing to all this capex and working capital and all? Why year 3 to 8 are saying so much pressure is coming on us? Why are you two not contributing? Because then what will year 1 and 2 say? We are not contributing because when we were there, no, they already had money. You're understanding, no? Somewhere else. They used that first, like that. Everybody clear? So please take that last column and put it in the row upstairs. I hope you're understanding. Put it in the row upstairs and get FCFF for 8 years. Krishna, very good point. It's an error. You asked, I told, otherwise I wouldn't have. Time value of money, no? Understood. I'll tell everyone, chalo, listen. You realize when you're doing this, you are assuming that all this investment is happening. Like for example, let's talk about year 3. Year 3 additional investment is how much? 3 million. Last. Can I say you're subtracting it from third year FCFF? Then the third year FCFF, can I say, will be discounted for 3 years when we are doing the final present value calculation? But then, do you remember that somewhere in the question they had said that this was at the beginning of year 3, not at the end of year 3. You remember this? The investment in fixed assets column is not at the end, it is at the beginning. Depreciation also accordingly only we have calculated. But for time value of money, they assume that this is at the end of year 3. You're understanding? That is the problem. Because I hope you realize if this 2 is at the beginning of year 3, it is actually an end of year 2 cash flow, no? You're understanding? Beginning of year 3 is like end of year 2. But we are subtracting this from FCFF of year 3. FCFF of year 3 is happening at the end of year 3. So there is a timing gap. You are understanding? There is a mismatch. So they made the question nice. Okay, they must have put these words that capex is at the beginning of each year so that students get ease to calculate depreciation. You are understanding? Now you did depreciation correctly, but then they forgot that this has an impact in FCFF also. You are understanding, no? That there they messed up. They could have made a solution more complicated than this also. You understand, no? We could have done things differently, but it's okay. Right now we'll go ahead with this only. By the way, as you saw in the module, this question has been deleted. It was there. They deleted it. Students, you're done copying? You got the final FCFF? You got FCFF last answer? Students, this is ICAI's practice manual 2017. I just downloaded it from mobile and I put it here. Uh, I I I just give me a minute. Just want to see what question is there. Cauliflower is contemplating acquisition of cabbage. This is ICA. Okay, anyways, 15, 16. Just keep your eyes open. I have started from 15th. Just see if you see this BRS INC question. 16 no, 17 no, 18 no, 19, 20, 21 no, 22 no, 23, 20. These are all mergers and acquisitions. This is part B questions which we are going to do now very soon. But in ICAI, no, earlier part A, part B, mergers and corporate valuation was one chapter. You're understanding? Both of them were one. Now they have bifurcated it into two. That is why I don't have a corporate business valuation separate chapter in the old. Whatever is there here only. Wait just a minute. These are all mergers questions. I wish I could search. I don't know how to search here. 36, 37. You see this question? We had done this. Anyone remembers by any chance? This is that fair value. In fact, this was that question that took us many weeks to complete. Midway, it was left midway, no, last time, that same question this is. 40, 41, 42, 43. I want you to see how ICA has presented all this. 46, 47. Hey, we are coming to it. Students, FCFF is here. This question we have completed. This is done. 48, this is there. Next. Don't tell me. Where are you? Chop shop. No. 51. Rate restructuring 52, 53, EVA 55. Not finding it. Anyways, so students, no problem. We'll go ahead. So you got FCFF. Everyone done? Mahalakshmi, you got it? It's there in RTP May 18. You can share it in the group if you have it. I cannot access the chat box here. I got it. BRS. Got it. Ready? So, okay. So, see how they are presenting. This is ICI presentation. Check. First, see, I told you 12.96, they rounded up to 13%. See, these questions, no, I'm telling you, many students will not do because it is not there in the module. You're understanding? But if it comes only, you will be able to solve. Take it very seriously. You're understanding? Because this is like you can't not see it and go in the exam and try to solve this. It is not possible. Okay, so 13 they did here. Then you remember this schedule of depreciation. We also did like this only. Schedule of depreciation. Yeah. So this is the determination of investment. Students, this I think we just now completed this table. Just now. Done. Okay. And then they go to present value. So don't get afraid by looking at all of this. Just tell me, is your FCFF tallying with this? Is this tallying? All numbers till the last. FCFF. It's not telling. Something wrong we have done. it's telling depreciation is different, eh? No. No. This do what I'm telling you is don't check this number. This is you know what this number is. You have done NPAT, no? NPAT plus depreciation. The total is this number, but we have not taken total at that place. Now we did NPAT plus depreciation, and we directly went to minus. My request is, see, okay, I'll make things easy for you. How to read this? Forget this. Now see. .05 you had got now earlier also. This number you had got earlier. Something is not right here. It is correct only. 0.05 was there earlier also. This was your NPAT. Now they have used the word NOPAT. They are right actually. It is a NOPAT. It is net operating profit after tax. Now interest has not been subtracted. Anyways, so that 0.05 after tax profit you got. You add the depreciation and you subtracted 0. You should land at 2.68. Is it not coming? Coming now? I am just trying to tell you. In our notes, you took these numbers, you put them here. Is it done? And then FCFFs you had to calculate. Okay, na? Don't give me shock. Huh? Okay. So, done. So we are done till here, students, everything complete. Now what is left? What is left, do you realize, is the last step. What is the last step now? Present value calculations, correct? Present value calculations. Now see, write down with me. Step 4. Step 4. Calculation of V bracket F. Step 4. Calculation of V bracket F. Here FCFF DF at the rate 13% present value. And I guess this is one of the simplest and the most comfortable things you can ever do. First 8 year you have from earlier only, and then here I will simply say P8 is equal to FCFF9 upon KO minus G. How will you find FCFF9? FCFF9 will be FCFF8 plus that constant growth rate 5% upon 13% minus 5%. Game over. 13%, understood, no? Get FCFF, please. Krishna, you consider that to be cash balance and think that it can be used for both, like that. Understood, no? Not technically WC, like that. And that's what is the assumption that they have taken. Don't look at their presentation. You do the way I have asked you. You will land up on their answer only. All done? Okay. And then last step, you understood how they did value of equity. Please check. I told at the start now of today's lecture, when we started this question, that minus value of debt you have to do. Complete that also. Point number 2, value of equity is equal to value V bracket F minus V bracket D. 50.82 minus 8 equal to 42.82. Done? Okay, so with that we finish the discussion to question number 14. No, 11. Now come to question 9. Last question on FCFF. All FCFF questions were big, no? EVA question was so small. EVA. Okay, question 9. Again a big question, read carefully. Ready? So listen. ABC is considering a new sales strategy that will be valid for the next 4 years. Okay. The company is there. they are thinking of implementing a new strategy of sales. Valid for 4 years means this strategy will give you benefits for 4 years. You are understanding? The strategy will give you benefits for 4 years. They want to know what is the value of the new strategy. Okay, how does ICAI calculate the value of a strategy? Very simple. What they will do is, they will calculate value of the firm assuming this new strategy was not implemented. Then they will calculate value of the firm if the strategy is implemented. The difference between both V bracket F's is the value of the strategy. Everybody, are you all understanding? So because let's say if I don't implement strategy, my value is 100 rupees. If I implement strategy, my value is 120. Oh, that means the value of the strategy is 20, no? You are understanding? It is because of that strategy that my value increased by 20, like that. Everyone clear, no? Till here. Okay. Following information relating to the year which has just ended is available. This is year 0 for you. Sales, gross margin. Okay, sales minus gross margin is, sales minus COGS. So basically, do you realize that gross profit is 20%, meaning COGS is 80%. Everybody clear, na? Gross sales is 100, na? Gross profit is 20, COGS 80. After gross profit, all the other indirect expenses are 10% of sales. That gives EBT minus tax, and that gives NPAT. Everyone ready? That's how they have structured it. Balance sheet information, fixed assets are there, current assets are there, and equity is there. Okay. Now, if it adopts the new strategy, sales will grow at the rate 20% per year for 3 years. From 4th year onwards, cash flow will be stabilized. Okay. So now this particular strategy, it is saying that if you implement the strategy, then for the first 3 years, the sales will rocket at 20% per annum. 4th year onwards, cash flow will become stable. The gross margin ratio, asset turnover ratio, capital structure, and income tax rate will remain unchanged. This has a very high significance in the question. As we do the solution, we'll talk about it. Depreciation would be 10% of fixed assets at the beginning of the year. Okay, depreciation would be 10% of fixed assets at the beginning of the year. It's like WDV depreciation only. The company's target rate of return is 15%. This is, can I say, WACC given to you, discounting rate. Determine the incremental value due to adoption of strategy, 20 rupees. Everybody clear? 100 and 120, determine the incremental value. Okay. Now students, very simple. In the notebooks, write down question number 9. Write down part 1. If new sales strategy is implemented, if new sales strategy is implemented, already, if new sales strategy is implemented. Okay, what I have to do? I have to calculate the present value of all. I have to calculate V bracket F. How do I calculate V bracket F? Present value of future FCFFs. Do you understand? Present value of future FCFFs. That means my whole focus now is to calculate FCFF first and then discount it. For FCFF, can I say we will have to do one depreciation working note first because of that WDV kind of a thing. Everybody clear, na? So now you have to be little attentive. Please pay attention. This is slightly complicated. Okay, all the best to all of us. Don't write because I will be writing, I will be cancelling, a lot of things will be there. Wait. So I am writing here step 1. I don't even know what is the heading of the step. I am just going on. Ready? I know of course, but please pay attention. Ready? So see, I am writing here particulars. I am writing 1, 2, 3, 4 and I am writing sales. Now, what were the sales of last year? 20,000. They are saying sales will grow at the rate 20% per year for 3 years. Okay, 20%. Give me the numbers now. If first year it will grow to, can I say 24,000? Second year, please, 20%. 28,800. 34,560. Stop. 34,560. You understood this? Because fourth year onwards it stabilizes. Everyone clear now? Okay. Now is the tricky part. Students, do you understand that last year my closing fixed assets balance was 8,000. Now search the question and tell me, are there going to be any additions in fixed assets? Take your time. There is a hint given somewhere. Are there going to be any additions in, you know how we add fixed assets and all that depreciation and all that is there. Capex basically. Is there going to be any investment in capex? Is there going to be any investment in fixed assets? Yes. Students, the hint lies here. They are saying that asset turnover will remain unchanged. Okay, what is asset turnover? Sales upon total assets, they are saying will remain unchanged. Hey, that means if sales increases and if this ratio has to be kept constant, that means the asset value is also increasing. I hope everybody is following. Huh? Did you understand what I told you? Okay. So what is my current asset turnover ratio? Can I say current asset turnover ratio is 20 divided by, okay, I'll put 20 divided by 12. Everybody clear? 20 divided by 12. This is my current asset turnover. Asset is basically including both. Everyone, are you able to understand? Asset is including both. So what I want you to understand is, we will therefore understand that if sales are going to increase, can I say assets will also increase in this ratio only? Everybody clear? And assets will increase means, can I say both FA and CA will increase? Do you all agree with me? Both FA and CA will increase. Now I have to keep the ratio constant. So now listen, I will write here closing FA, I will write here closing CA. Now individually, what is the relationship of fixed assets and sales? What is the relation between fixed assets and sales? Please do 20 divided by 8 and give me the number. 20 divided by 2.5, no? 2.5, which means, can I say the fixed assets turnover ratio is 2.5, and can I say this has to remain fixed only? Everybody clear, na? This turnover will not change. Similarly, there is a current asset turnover also, that will also remain fixed. Asset turnover is not going to change. Everyone clear till here? Can I go ahead? Now, can someone please do what is 8,000 divided by 20,000? 8,000 divided by 20,000, reciprocal of 2.5, how much is it? 0.4, na? ICAI in their notes say assets are 40% of sales. Tell me, do you understand this language? Assets are 40% of sales. Now I know 40% is not a turnover ratio. But do you realize that if turnover ratio will remain constant, the reciprocal of turnover will also remain constant? I hope you are understanding. So you can go ahead with 2.5 also will get the same answer. I hope you are understanding. But you can go ahead with this 40% also. I hope you are understanding the same thing. Sales is 2.5 times of fixed assets. Or you say fixed assets is 40% of sales. I hope you get it. It is the same calculation. Everyone following till here? So can you please tell me what are your closing fixed assets, please? Okay, thank you. 9,600, 11,520, 13,824, 13,824. Story clear till here? Similarly, tell me what is the relationship between current assets and sales? 4,000 divided by 20,000 into 100. 4,000 upon 20,000 into 100. 25%, no? Am I right? No, not 25. 20%. 20%. So current assets will be 20% of sales. Give me the number, please. $4,800, 5,760, 6,912, 6,912. Story clear till here? Done? Great. So I calculated calculation of closing FA and CA done. Everyone clear? Now, step 2. Please pay very careful attention. Step 2. I don't know what I am calculating. I'll tell you later. Okay? Okay. Year 1, 2, 3, 4, 5. Opening fixed assets will be what? Opening fixed assets will be what? Can I say whatever is the closing will become the opening? I hope you are able to understand. Whatever is the closing of the previous year will become opening of the next year. Everybody clear till here? Everyone following, no, what I am speaking and all that? Okay. So, year 1 opening will be year 0 closing, that is 8,000. 8,000 of last year will be opening for this year. So, I will write here 8,000. Then can I say 9,600, 11,520, 13,824, 13,824. Everybody clear? Closing of year 4 is opening of year 5. Closing of year 3, opening of year 4, and so on. Closing we got from here. Everybody clear? Done. What is the depreciation percentage? 10%. Correct? Depreciation is 10%. Now students, I am keeping this in front of you. I gave you a hint. I want you to find for me additions in fixed assets. And assume additions are happening at the end of every year. Huh? You understanding? Assume additions are happening at the end. That you do. Assume additions are happening at the end. You do it in rough, huh? Don't do it in fair. Rough, rough, rough. Think, even if you get only for year 1, even if you get only for year 1, then also I'll understand. You understood. Take your time. Oh, year 1 started with 8,000. Year 1 closed at 9,600. Oh. Now, those who are saying 1,600, let me tell you, you are ignoring depreciation. No, that is a mistake you are doing. 1,600 means you are saying what? 8,000 at the start, 9,600 at the end. Oh, I purchased worth 1,600. Wrong, wrong. You have to also take into consideration depreciation. No, this 9,600 must have happened after year 1's depreciation. One person has got it right till now. I am waiting for others. Again I am saying assume the addition is happening at the end of the year. That is depreciation amount. Ah, so Krishna got it right earlier. Nikita, you got it right now. Mahalakshmi, right. Don't write, huh? Whatever you think is right now, don't write, it is not right. Okay, I'll explain. See, so I'll keep this here. Look at the screen. Calculation of additions to FA. Can I say opening FA minus depreciation plus additions will be at end of year, huh? Will be equal to closing FA. You understand this? There was an opening that got depreciated, then new addition joined in, that will become a closing. Everyone clear? We started year 1 with 8,000 and I know it ended with 9,000. Correct? Depreciation, I hope you realize, will be 10% of 8,000. So I'll write here 8,000 into 10%, and that is, can I say, 800. I hope you realize a closing is not 9,000, closing is 9,600. Sorry. Yeah. Sorry. 9,600. So can I say you will get additions? Understood now what I am doing? You will get additions. How much? So I'll say therefore additions will be 2,400. Everybody clear till here? Additions will be 2,400. Like that for year 2, 3 and 4. Can you try? 2, 3, 4. So students, first of all, step 1. Part 1 you have written, a heading you have given. If new sales strategy is implemented. Step 1 you complete first. Then step 2, get me the additions please. Start. All done. So 2400 for first year, 2880 for second, 3456 for third, 1382.4 for the fourth. Is this right? 1382.4. Fourth year, basically this number is same as the deprivation only, no? Because the opening and closing must be same, something like that. Okay, all right. Okay, so we are done with this. New sales strategy implemented. We have completed step 1, closing FA. Step 2, additions to FA also done. Hey, additions to CA, how will we find? Nothing great, I hope you realize. Closing CA minus opening CA is addition to CA. There is no deprivation concept, no? You are understanding? Like for example here, CA started with 4000, now CA is 4800. So the increase, additional investment in CA, that is the investment in WC, can I say will be 800 rupees. Everyone clear? 800 and then next 960 and so on. Okay. So I think we are ready for our FCFF calculations. Let's start. So in the notebooks, write down step 3. Step 3, calculation of FCFF. Step 3, calculation of FCFF. Particulars 1, 2, 3, 4. This is done now, everyone. In fair only done, no? I told you, no, step 1, step copy. Okay, no problem. So you just take a screenshot. Okay. So let's start. Now listen, how you have to tackle this. Again, now you have to try this. Look at the screen. Sales is there. Okay, sales. Now, what are these people saying? These people are saying that gross margin ratio will remain same. Okay, that means can I say gross profit will continue to remain 20% of sales? I hope you are listening. So you will write here GP 20% of sales. Now after GP comes admin expense. Admin expense also is a ratio only. Everybody clear? It's like a variable cost. It is 10% of sales. So can I say here you will write minus admin expenses, which will be 10% of sales. Wait, don't write, which will be 10% of sales. So students, do you realize after doing this, you should get your EBIT. Everybody clear? EBIT. Now my proposal is, can I say EBIT instead of doing this minus this, do you realize EBIT will be 10% of sales? Because gross profit anyways is 20% of sales. Admin is 10% of sales. So the remaining EBIT is 10% of sales, no? So why to do all this? We anyways need everything after EBIT, no? So we will do EBIT is 10% of sales. I hope everybody is clear. Understood what I did? Everyone? Sure? In fact, in the textbooks only you can do this so that you understand. See, sales is 100, gross profit is 20, admin expense another 10. So EBIT is 10, no? You are understanding this? This is basically EBIT. Then what has ICEA done? ICEA is saying, okay, you got EBIT in the now. Now they wrote NPAT bracket 70% of EBIT. Everybody, are you all able to understand? They did not show tax and all that. So EBIT is 10% of sales. All done. Once you have NPAT, okay, then you can directly go to CFAT if you want, or you can show that row of add depreciation. Hello, we'll show that row of add depreciation. Now, students, depreciation you already must have calculated earlier, no? You have it now here. In step 2 you already have the depreciation. So when you add back depreciation, then you subtract the capex which you have already calculated, then you subtract the investment in current assets or working capital. Can I say investment in working capital? Understood, no? Year 0 current assets is 4,000, year 1 current asset is 4,800. Can I say that means additional you need is 800 rupees and so on, and that will give you FCFF. Can you get it till here? Start. All done? Can I? Other studies assumed. No? Generally, we assume that only. No? Can I show the solution? Kusuma, 1 minute you want? Or okay. You're not stuck no anywhere? Divya? It's okay if you're getting negative. You have already written the sales. EBIT is 10% of sales. NPAT is 7. First 3 rows is simple. First, actually all rows you know. You have to simply put numbers. Anywhere getting stuck, ask me. No, I'll help. Okay, then see the solution. This is their answer. No, okay, check. Any number not understanding, ask. If nothing, I'll go ahead then. Mohammed, how will things change? Tell me, no? Total will be that only. Just think about it. Okay, ready? I'll go ahead. Everyone done? Okay. So now comes the last step. Step 4. Calculation of V bracket F. Final present value calculation. So here FCFF DF at the rate. What is the DF given by them? 15%. 15% and present value. 1, 2, 3. 3 is enough because 4th year cash flow will be stable. No? 1, 2, 3, 3. So this is negative 720, this is negative 864, this is 1036.8, and then we'll put a star. P3 is equal to FCFF4 upon KO minus G. FCFF4 is 2419.2 divided by 15% minus 0, na? There is no growth. You all understanding, no? Sure. So this is 16,128. Target rate of return means target required rate of return. Got the final? Okay, this is value of the firm is negative valuation. No, what is the final value? ICAI has got the final value as 8641 something. They have taken 3 decimals in the discounting factors. You have also taken 3 decimals, na? First 3 numbers according to ICAI are these. Just check, are you getting these numbers? And fourth number according to ICAI is this. Check. I think in the fourth number they did not take 3 decimals, they took all decimals. They directly divided by the compounding factor. That is the reason why. Understood, no? Somewhere rounding off, somewhere no rounding off. Like that they have done. It's okay. So they have got the final answer as 8641.76. You will get around 865, something like that. 8650. Everyone check please. Check Mangalore. 8650, no problem. 8650, something like that you should get. All got it? So this is not the end of the question. One small step is still left. Everyone done till here? We have got the value of the firm. Now with me, please write, it will take 5 minutes only. Write part 2. Write down with me. Part 2. If new sales strategy is not implemented, if new sales strategy is not implemented, if new sales strategy is not implemented. Step 1, calculation of FCFF. You will understand how time pass this is. Calculation of FCFF. Write down particulars and just write year 1. I don't need all years. Year 1. Because if new sales strategy is not implemented, nothing is going to happen. What was happening last year, that only will continue. I hope you are understanding. So, write down sales. Bracket same as year 0. Sales same as year 0. 20,000. Why am I taking year 1 sales same as year 0? Because I am not implementing any new sales strategy, no? So what is there only will continue. All understood? EBIT, 10% of sales, 2,000. NPAT, 70% of EBIT, 1,400. All clear? Done? NPAT 1,400. Okay. Now you have to pay attention. Students, I am writing here, add depreciation. Wait, don't write. Wait. Depreciation, tell me, can I say will be 800 rupees? Please listen carefully to me. Depreciation will be 800. How did I get 800? You understood na? Last year I have got 8,000 rupees as fixed assets. 10% of it, 800. I am writing less investment in capex, 800. Can someone figure out why am I saying both will be same? Both debt and capex will be same since opening FA equal to closing FA. You will say, why is opening FA equal to closing FA? Opening FA equal to closing FA since sales will remain same and asset turnover also same. This language you understood? In the earlier part, as sales was increasing, FA was increasing. I am saying if sales remain same, can I say FA will remain same? Everyone, are you able to understand? And you have seen na, if the opening FA and closing FA remain same, then the investment in capex is same as depreciation. Everybody clear? Can I say investment in current assets will be nothing because your current assets are not increasing only? Everyone got it? And can I say your FCFF at end of year 1 will come to 1400. Please copy till here. Divya, understood, no? Why is there no investment in current asset? Mahalakshmi, understood? No investment in current asset, why? Because, can I say sales are not changing, so current asset also will not change, nothing extra. All done? And now last step, step 2, calculation of V bracket F. Calculation of V bracket F. Now students, there is no table to be made. I will simply do FCFF1 upon KO minus G, because I hope you realize there is no different. Now this only is going to continue ever. No sales strategy change. This is 1400 divided by 15% minus 0%. And that comes to 9333.33. 28,000 from where you got? 14,000 divided by 15%. Got this, everybody? Now students, all this you wrote now in part 2. Look at the screen. All that you wrote in part 2 right from here till here. ICAI has wrapped it up in only one line. Only one line. And from where you will say, sir, from where they got 1400? They are saying it was given, no. But then if I tell you take last year's NPAT and go ahead, you will not understand. You understand? It is not about last year's NPAT. It is because of lot of things. Sales remained same, EBIT remained same. Because sales remained same, depreciation, opening FA, closing FA remained same. Because of that depreciation, investment in current assets remained same. Current assets, because of that investment in fixed assets and depreciation remained same. Current asset remained same, so nothing to add. So all that factors contributed for the FCFF to remain 1400. Everybody clear? Like that. So students, tell me, last step, last line. If you implement sales strategy, can I say the value of the firm is 8650? If you chup chap go ahead without implementing sales strategy, can I say your valuation is 9333? So what is ICAI saying? Value of the strategy comes negative. I hope you are able to understand. The value of the strategy comes negative. Everybody clear? So write down, therefore value of strategy equal to, you have got some 8650 something. Take that number, 8650 point something minus 9333.33, and you will get a negative 682, 680, somewhere around 683, okay, 82.9 or 683.3, whatever. Got this? And just write conclusion, the strategy is not financially viable. Question over, module of FCFF over, lecturer over, and mission starts. I hope we both will fulfill our mission today. What is the mission? 1 hour screen time and 2 10-minute Pomodoros of studies. Any studies, of course, related to politics. Related to CA final. Okay? All right. Bye bye. Take care. Tomorrow reporting, both will report. Bye.